Having a diversified investment portfolio means to invest in various assets. It does make their investment complicated, but still they are advised to maintain a diversified portfolio. Why is it? To get a better picture on this, we have our investment expert Mr. Gurraj with us. Gurraj, help us understand why asset allocation a must in our investment portfolio.
This is very important. You should not put all your money in one basket, right? All eggs should not be put in one basket. So very, very important. Don't put all your money. Many people make that mistake. Everything will be in shares, everything will be in equity mutual funds, or everything will be in FD. Don't do that mistake. I just want to share some data points. See, when you're investing in equity, it will give you a higher return, no doubt. But the problem is, see the volatility, 18% almost. Maximum loss you have incurred is 38%. Similarly, when you invest in debt, the volatility is less, but the return is also less, right? Gold, of all the things, last 10-year return is only 3.8 in gold. People are crazy about gold, but still it is 15% volatile, and the worst drawdown is 28%, which has happened in September 2013 and March 2015. Imagine if you have put all your money in only one asset class, you might be better off in a debt, but definitely you will be worse in equity and gold, right? That is where we say first allocate your money, right? Say for example, instead of putting all your money in equity, by putting 70% in equity, 15% in debt, 15% in gold, your return is not bad. 12.2 is a decent return, but in the process what you're achieving is less risk. See, maximum drawdown is only 30% instead of 38. Now if I reduce the equity further, you can see here, if I'm only taking 60% equity, my return is still good, 11.5. Only 27% maximum fall. If I reduce it to 50%, my return is still more than 10%, but my maximum fall is only 23%. That's where I said asset allocation is very important. Have at least 25% in debt. I mean, ideal asset allocation, if you ask me, it is 45, 45, and 10. This is what study has proved. It gives you around 11.5 to 12% kind of return. Study was done by CRISIL for almost 1997 till 2020, right? But based on your comfort level, I will even say 60-40 is a good one. Don't have more than 10 to 15% in gold. Gold should be used for consumption, not for investment. Yeah. Even asset allocation can be done in SIP. We have done this 70, 15, 15. It has still generated 12.2 with a maximum drawdown of only 21%. If you have done 100% equity SIP, yes, you would have got 14.2, but your loss also would be. See, the problem is bearing the loss. Problem is not return. When market corrects, if you are able to bear it, okay, you take the risk. So the whole idea is you have to do asset allocation. There is no two ways about it. To reduce the risk in your portfolio, please do asset allocation. Put in 2, 3 categories of equity, debt, and gold. So that will reduce your risk.
Thanks for your detailed answer. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.